Hi everyone, welcome back to Be Rich. It's me, Vinod here, recording remotely from Bangalore, wishing you all a wonderful time of the year, as they say. One more day and we're in Christmas. So tomorrow is Christmas Eve, and I hope you're getting closer to celebrating all of this. As we're concluding this year, I thought I'll take this opportunity to talk about microfinance and what's happening in the microfinance sector. And as a case study, we can look deep dive into this company called Fusion Finance Limited. As you know, the whole sector has been not doing great. Companies like Manappuram because of Ashirvad and IndusInd Bank because of Bharat Finance in it. All of these big companies are being dragged down because of the whole sector of microfinance and what's happening in microfinance. And what is basically happening is they've been very free and easy with their lendings, and people have been taken to ride. Customers, that is, been preyed on because of their weakness and their psychology of wanting money and wanting things. People who should not be given 1 or 2 credit cards have been given 4 credit cards, and they've spoken about this extensively. And I thought we'll talk about Fusion Finance and what happened in Fusion Finance. And by the end of this video, we'll see if we should be investing. Is this an opportunity? Will there be recovery in the coming year? Or should we be cautious and avoid it for the time being till we get more clarity? Because Fusion Finance itself has corrected almost by 75% almost. So let's say you've invested in Fusion Finance when it was down 25%. You would see still huge losses from where you invested in. And other people who are looking at Fusion Finance now, especially price to book, when it's at 0.7, are thinking, is this something I should be looking and entering? Because when we look at finance companies, we always look at price to book. And any price to book below 1 is considered to be value proposition at that point of time. So this is what I wanted to talk about today. So let's get into what is happening in Fusion Finance. So I'll keep referring to my notes now and then. Please don't get upset if I keep looking down, because there's a lot to talk about and I can't remember all of it, especially when it comes to numbers and dates. Fusion Finance Limited was backed by this company called Warburg Pincus, right? It was listed in 15th November 2022, and the share price, which started at 325 rupees a share, and it peaked at 692 in August of 2023. Since then, the price has dropped by 75%. Now it is at 174. So what has happened in Fusion Finance? So before we get into what has happened to Fusion Finance, we must first understand what does Fusion Finance do, which has got it into so much of trouble. Fusion Finance is a micro-lending business. So the primary focus is small loans to low-income individuals, especially women, in rural and semi-urban areas, right? These loans are aimed at promoting income-generating activities such as small businesses, agriculture, and retail. And they have something known as the group lending model, which we all know about, which is a joint liability group. That means under the small group of borrowers, a collective, are responsible for repaying the loan, reducing the default risk. So that means, let's say, to spread the risk of repayment, what they do is they go and look at a household. Let's say there is down the road, there are 4 houses down this road, and all 4 of them in this low-income house require, collectively they want to borrow 50,000 rupees. So they tell all of them, you are jointly responsible for this EMI of this 50,000 rupees, and peer pressure amongst them, the psychological, social settings such that people will feel motivated to pay that 50,000 rupees because they're collectively responsible and they wouldn't want to bring down the entire tribe, was to say. So there's that kind of joint lending, and that too also encourages the finance companies to lend to them, because the finance company feels encouraged that not one person responsible for this loan, there's a group of people responsible for this loan. So it's kind of a win-win situation. This was a concept started way back in Bangladesh by a Nobel laureate who's now their president, I think. And it's not a new concept. A lot of banks and microfinance companies are doing this, especially targeting low-income households. And this is what's been going on for quite some time, and quite successfully, mind you. It's not that every single loan which has been given out has turned into a non-performing asset or an NPA. But where the problem started getting worse was these loans were small ticket loans for entrepreneurial activities, right? Or emergency loans for unforeseen things like, you have an accident or hospital. So this is the main reason. Then of course, consumer loans. To buy consumer goods, they were using this. But the problem started coming in when Fusion Finance started lending practices started changing, and they became more loose in their lending finance practices, and people who should not be given a loan started getting loans. People who have already been burdened with a loan are getting more loans, because it's human nature, it's human tendency. We all suffer from this. We all have an urge and temptation to buy something we cannot afford. We all feel like we can stretch ourselves and we justify ourselves mentally. We can do this. Right now I'm getting so much of money. I can pay this EMI by such and such a date. And even if I have to stretch myself, I can finish it off. We can't see the future, but we believe that we can. We cannot see that maybe we might lose our job, or we might be in a position where we're not able to get an income, or that we have miscalculated our EMIs and we are now taking on more EMIs than the actual cash flow we have. And maybe we have even discounted and forgotten things like school fees to pay or insurance premiums to pay. It happens. So these kind of loans have been lent over and over again to people who should not be given these loans. Why would a bank do this or a finance institution do this? You may look at it from this perspective now and say they shouldn't have done it. But lo and behold, you also have to see it from the guys who are running the financial institution from their perspective. They have investors to keep happy. Investors are like people like you and me who have invested in this company, who are expecting certain growth to be coming out of this company. And if growth is not coming out of this company, then we feel let down and we don't see reasons to invest in this company. So to keep investors invested and to keep market interest in them, they have to show growth. And for a finance company, growth comes through lending. All the money is with them. They need to lend it out in the market and raise income through collecting interest for the money they're lending out. And these interest rates are much higher than regular bank interest rates, so they are more profitable in that nature. So this is another reason why these guys are interested in lending and investors are interested in investing compared to other. That's why even Picus has even started Fusion Finance in India and floated in an IPO. Now, what has happened is there's been a steady rise of NPAs in microfinance sectors throughout all of them. That's your Manappuram Ashirwad, IndusInd Bank. Now even IDFC has been caught in the maelstrom of this microfinance. But in the case of Fusion, theirs has been exceptionally little higher than the rest of them. And they've been taking a severe beating in terms of the NPA, people not repaying, that is. And it's gone ballooned up. And if you see the comparison to the other ones, which I'm sure Rupesh should have put up the chart by now, you can see quarter on quarter, Fusion's numbers have not come down. And even the last quarter, it's actually at 9.7. So this is where the problem lies. And this is why people have been selling this stock by the droves. Now, is this an opportunity to invest? Like I said, we're looking at Fusion Finance now at 0.7 price to book. But what you have to keep in mind is this is price to book. So the book value includes around 30% of these non-performing assets. So this is something critical to keep in mind. Not only should you look at the book value on finance companies, you also need to make sure you look at the quality of the book value, right? That means such as because someone has a book value of an X amount, but all their loans and lendings have been to terrible companies. This is true with a lot of our government banks, They've lent because of reasons, whatever reasons, to companies which have turned into non-performing assets. Though the book value looks large, but most of them are NPAs. That means it's not really, you can discount it from the book value. So keep that in mind. So if you discount at that 30%, are we still at 0.7% is something that you have to think about and wonder about and ponder on. But there is some positivity in terms of Fusion Finance. The board has approved and they're planning to raise 800 crores in terms of issuing rights. So that shows the promoters of Fusion Finance are not backing out, right? They're doubling down and they're saying, okay, we will help you through this tough situation. We'll help you weather the storm. They're offering rights issues. So seeing investors also can join in and help support Fusion Finance by raising that 800 crores to help them tide over this NPA crisis which they're going through. But the question now remains, is this a value proposition now to enter? If you've already bought Fusion Finance at a higher rate, should you be buying more of Fusion Finance? This question is where I'm going to leave you at by this video. The question of investing into Fusion Finance now or not is purely up to you based on your risk assessment. My advice would be to wait and watch. I would not rush into it, depending on your risk appetite. I don't want to personally put out what I'm doing because then it'll sound like it's either a vote of confidence or it is a vote against investing. What I would ask you to do is to think about it. This sector is going to recover. Note about it because microfinance is vital for India's future growth and India is growing, the economy is growing. So this will finally recover. Will it recover next year? I don't know. I think it will take longer than a year to recover. And maybe the whole sector only, if you look at it, maybe 26, 27 is when we're going to see some good numbers coming out of the microfinance sector. So this coming year is going to be a tough year. And the question is, will they survive? I think they will. Microfinance sector is not going to go anywhere, like I said. And Fusion Finance is not going anywhere because the promoters of Fusion Finance, Warburg Pincus are not going anywhere. They're supporting this. And I think they would also make sure Fusion Finance pulls through. How long is it going to take is something we have to wait and watch. And I would advise you strongly to keep an eye on it. And if you've already invested in it, I wouldn't say bail out of it if you have to. But depending on your situation and your risk tolerance and your financial situation, it is something to consider. You're not going to see tremendous recovery and coming back to 600 anytime soon is what I feel. So this is what's been happening in the sector in 2024. Microfinance sector has been a tough year for them. And going forward, 2025 will also still be a tough year by the looks of it. It's going to take a little longer for it to recover. So this is what I would be my conclusion at this point of time as we're coming to the close of 2024. Tomorrow I'll try and talk about something else. On Christmas Day I have something interesting and motivational, I hope, which you'll tune in and watch, though it is Christmas Day and it'll be Christmas night. For those of you who have not managed to catch up with your family and friends who are at home alone, maybe you can catch up with me on Christmas night. I wish you all a Merry Christmas and a Happy New Year ahead of all this. Do take care and be safe in all your merriments. I do read stories and hear articles about young guys who are taking on unnecessary risks in their merriment. Please be careful out there. We do want you to have fun, but be safe at the same time. Thanks for watching the video. Me and my team appreciate all the love and affection from you guys, and we wish you the same, and we'll see you soon in another one. Thank you.
Hey guys, that my uncles Vinod Srinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog/newsletter where we're going to post our original research onto it, and we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu, and these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you.